What's happening, you all? You know who it is. The CoWaCo, the company water cooler. We back again for another one. Like, subscribe, comment, and share. We're not financial advisors, but this is for educational purpose only. And we about to get it in. First, we're going to talk about your position within the market. Chris.
Yes, sir.
What you got to say?
Yes, sir. First and foremost, appreciate you, Sensei. Thank you very much. Ladies and gentlemen, we appreciate you for joining us. This is the company Water Cooler. I am Chris. That is Leroy. Thank you for being here with us. So we're going to talk about your positions, knowing your positions in your portfolio, and a little bit about knowing your positions in life. So know your position on your team. Know what you're strong at. Know your position in the market. So if you're a good trader, be a good trader. If you're a good long-term investor, be a long-term investor. It's important that you understand that when you're investing, yeah, you can be good at both. You are going to have one strength over the other, though. So you are going to be exceptional at trading and really good at long-term, or you're going to be exceptional at long-term and okay at trade. You'll eventually get both, right? Because what happens with the long-term is you pick companies, obviously, that have great management, they have great leadership, the company checks out, you have a number of institutions invested in it, you've got really good banks, like people trust in this company and they want said company to win. So you're going to want to know in that company where you stand before you invest in it. But as you're investing in it, because you want to grow with the company, you want to go from 1 shares to 2 to 10 to 20 to 50 to 100. And that relates obviously in life when you just want to know your business because you don't want to overstep your bounds. If you're new to trading, this is something that's new to you, you're new to investing, you have to know your limitations financially, but also in terms of your comfort level, right? Because you could have a decent amount of money that you're willing to invest, but you don't like risk, right? You might have $10,000 to put into the market, but you know that you're the type of man or you're the type of woman that wants to see a return in a week. And with investing, you might not get that 10, 15, 20% in a week that you're looking for. So you may be introduced to trading, you may have that option available to you, but know your position, know your positions. The other entendre, know the companies that you're invested in. So know your positions and your place in those positions, but know the companies you're invested in. The CEO, how long he or she's been there, how much money are they making, what products and services are they offering, what percentage of the market they have. Know these things, know your position and know your positions. So know Apple CEO is Tim Cook. He got a bachelor's here, he got a master's there, he got this there, he got that there. He's been running the company there. Here's his vision for the company there, so on and so forth. So then you can say, okay, I'm comfortable investing. You put your money in it, it grows, you pat yourself on the back.
That's what's up. Now, we talked about this before about having groups too. So with you actually knowing your positions and your strong points, or what you're strong with, and if you actually link up with, solid people, so your weak points to your weekend, they can be strong in, and y'all can be able to work together also too. So just by you actually knowing your position, you know what strong points you bring toward the group.
And in terms of positions and equities and stocks, know when to enter and exit positions as well. So know when to get in and out of stocks.
Right. Right. So if you actually have a plan put together and you was deciding to actually get out at a certain price, make sure you follow your plan the best possible way, because by you actually following that plan, it will help you out, to be able to save you from losses, and it will actually have where you can be able to actually take profit. Even though, like, for example, if you was saying you gonna get at a certain price and you got out and the stock keeps running, at least you did make some profit. So I just want to mention that also too.
Mm-hmm.
All right. Next is seeing your investment through. So, like, if your
Yeah.
investment is not going the way that you want it to go,
Yeah.
seeing it through.
Which is what a lot of people are experiencing right now, honestly. So, especially with tech, especially with technology. So, a lot of people are like, man, tech is down a lot. This is a great buying opportunity because these are good companies. If the company is bad, obviously don't invest in it, right? If the company is bad and it was once trading at $3,000 and now it's trading at $30, that's a bad company, right? Because they would have never let it get. Once it got to 2,500, they'd be like, all right, we got to change something up. So in your positions, when you get into these companies, you have to see their long-term vision. That's why I said it's important to know who's running the company. It's important to know his or her vision for that company in the future. You have to know these things because that's going to determine, okay, is this going to be a 6-month hold for me? Is this going to be a 3-month? Is it going to be intraday? Is this going to be a year? Is this going to be long-term? And of course, you can short-term your long-terms, but you don't long-term your short-terms. You see what I mean? So if a company is bad, you don't hold that. If you know that you don't hold bad companies, you only hold good positions. So if the company is good, you can, okay, all right, cool. They're not doing so well right now. I'm still going to make money off of that because you know that there's an upside for that. Apple is going to be up in 2 years. Like it's almost a guarantee, right? Apple is not going anywhere. It's a safe haven, right? And of course, we bring that up because that's the biggest. Apple is the biggest company ever, but they have a strategy and a plan for that. How many institutions are just going to pull out of Apple tomorrow? Not many, right? How many of them are going to, let me say, close their positions in Apple tomorrow, right? They're not going to do that. So it's taking a hit right now, but you'll still be able to long-term see the growth potential for it, see the value in it. So whenever an investment is going sour, check if anything at its core changed. Did anything in the core and the company core change? If not, stick with it, double down. If something changed that you foresee is going to make the company terrible and the company's going to flop, then you need to get out. But the company being a good company run by good men and women, making good money, turning profit, that's a good investment. That's a solid investment. It's like any relationship that you have. You know she good. That's a good woman right there. She good. She a little crazy, but that's a good woman. Stick with her. Stick with her. That's just like that, man. It's just like that. You know? But now listen, if she is crumbling your social circle, if she is making your life difficult, that's a bad company. You're gonna need to exit out of that position. Right. But if it's only a couple things that's going on, only a couple little things here and there, oh, she's a good investment. Cool. Stick with her, see her through. But it's just like any relationship. Just like any relationship.
I like that analogy. That was a good one. That was good.
I try to do what I can, what God allows.
That's right. Grandmaster Sensei. That's what's up. All right. So now we're to the point of favorites of the week. So,
Yeah.
Chris,
Yeah. Oh, what I got? Okay. So Walmart, obviously, they're saying that, keeping that to the end of the year. Retail is it's I mean, I know that I feel like every year analysts project that Americans are going to spend less money on the holidays, but then they go and spend more money than anticipated. So I'm going to stick with Walmart on this one. Dividend is great, good company, great management. Again, I'm excited for what they're doing. Want to go Tesla for my number two. I think Tesla right now was a great price. Tesla, I saw 160 something, 70 something, I don't know, but Tesla was at a great discounted price right now. Elon, he's running Twitter and he's running Tesla. He'll be fine. He's got it. He'll get a good management team behind that, and but I only say Tesla because the price has dropped so low. It's a good entry. I think it's a good entry right now. And then my third company, I'm gonna go Home Depot on my third. I'm gonna go Home Depot on my third because the weather is cooling down for sure. We are in winter, and it's not going to be. I don't think you're going to see a slowing of construction. I think you're just going to see a slowing of traffic to get to construction. Because you work construction, you work all year round, right? Rain, hail, sleet, or snow. So I'm gonna pick Home Depot for the reason that I think when you, I think large purchases, a lot of people. So whenever times are hard, whenever economic recessions are happening, whenever money is tight for a lot of people, it'll be suggested that you don't make big purchases. Don't go buy a refrigerator. Don't go buy a couch set. Don't go buy, add on to your garage. Don't go and put a new engine in your car, fix your car. I think I disagree with that for this reason. If you don't buy that, you still have to buy the trinkets and you still have to buy the small things. So if I've got $10,000 in my account and I want I need a new refrigerator. Let's say I need a new refrigerator. The one I got is busted, it's not working. I got to do all these things to get it fixed. And a new refrigerator is going to cost me $5,000. I still have 10, but then let's say my monthly expenses are $3,000. So that takes me down to 2. And let's say I make $3,000 every other week. So that takes me to 6 every month, right? After I make that purchase and my expenses, and let's say I have an unexpected expense come up, now once I get paid, and of course I have more than enough money to cover my monthly expenses, but I don't have that 10,000 in my savings. And let's say I want that in my savings. If you make a big purchase, I feel like that incentivizes people to be smarter economically. Because when you're just making small little corner store purchases, right? Like you're not thinking about the money you're spending. So you go to the grocery store, let's say you don't have a list, you don't budget when you go to the grocery store. If you have $10,000 in your checkings account and your total at the grocery store comes up to $200, you're not sweating that. You're not even thinking about it. Oh man, that's 200 out of 10. I still got 98. Then you go to another retail store, and let's say you get, lights or something decorative for your home. Your total comes up to $300. So the little purchases eat away at the big amount. But the big purchases you see, refrigerator, $5,000. Boom, right here. Okay, let me not spend money for this many months or that many months because I have this big purchase on my balance sheet. Obviously, this is the case where you can afford it. I'm not going to tell you now to take on debt in economic hardship, in economic recessions, because that's debt, and that's more money that you owe back. But 2, you're not going to get a good deal. You're just not going to get it. Inflation is 8% this year. The Fed is raising rates, which, I mean, you know, it's making it more expensive to borrow money, but people still got to eat. They still got to live, right? So money's not going to stop being spent. So don't go into any debt you don't have to go into, because you're not going to get a good deal for that in this time. Wait for rates to go down, wait for inflation to even out, and then you can shop around for rates. But now, and you can see this when you make purchases for everyday items, right? You want to buy a vacuum cleaner. You'll see that on Amazon, it's the same price it is at Walmart, the same price it is at Big Lots, the same price it is at Dollar General, the same price it is at Target. And you're like, man, usually it's cheaper here when I go there, or it's cheaper there, but it's all the same price right now. You're not getting a good deal because they have to tax, because it's an economic recession for everybody, not just you. Now, of course, if I'm making a whole lot of money, it's not hitting me as hard, and I don't have to really think about it because I can just tax whoever I'm selling stuff to. But that's going to lower the demand for the products I have. And if I'm not making money selling products, I got to spend money storing them. I don't want to store that many products, because if nobody's buying it and I got 150 units or something, I got to find somewhere to store that. That costs me money, right? So don't go into any debt you don't have to at the moment, because you're just not going to get a good deal. And if you have to make a purchase, have to make a big purchase, make that the one big purchase that you make for several months.
Okay.
So Walmart, Tesla, Home Depot.
All right. So he said Walmart. I'm going Target.
Okay. I like Target too.
All right. So that's going to be my first one. Target is my first one. All right. And my second one is actually going to be Microsoft. I know he said Apple earlier.
Mhm.
I'm going with Microsoft.
We like them too, man.
So, Microsoft, again, you know, dealing with the Xbox, you know, holidays coming up, the gaming system, you know, so Microsoft gonna be in there. People gonna be buying games, buying the Xbox, getting in,
Oh yeah.
you know, and it's a where you can actually, you know, hook up to the TV and play apps off of it also too. So hey, my last one is actually AMD. Advanced Micro Devices. AMD. Check them out. The CEO over there definitely doing her thing at AMD.
Man, they just actually partnered with Microsoft for a chip. They coming out with the fastest computing chip. So it's interesting that you mentioned that. But yeah, I mean, you just gave 3 hitters, man. 3 hitters.
Yeah, now don't quote me on this. I think AMD also have their chip in Tesla too.
Yeah. Yeah.
Also too, the Tesla cars.
Yeah.
So don't sleep on them. Definitely don't sleep on them.
And they had a great price right now. It's that, so get in. You know what I mean? Like, get in there.
Yeah, get in there. So those are my 3: Target, Microsoft, and AMD.
Yeah.
All right, you all. That's it. The CoWaCo, the company water cooler, and that's the CoWaCo.
Yes, sir. Yes, sir.
All right.
The company water cooler. Like, comment, subscribe, share. All 4. Do that thing.
Yeah. Peace.
We out.